Afternoon, whatever time of day it is.
Hey, good morning, Spencer and Chris. Good to see you.
Hi, Matt.
How are we doing today? A lot going on.
Doing really well. Yeah, it certainly is certainly busy, but things are going really well.
Let's talk about the merger and why you chose to go this back route.
Yeah, so we had a lot of options available to us. You know, we're a private company, and we could have raised capital and stayed private with a financial sponsor. We could have done an IPO, and we're cash flow positive and net income positive. So we didn't need to raise capital, but the opportunity to be able to access the capital markets and to be able to do it through a SPAC sponsored by Apollo, Spartan 2, was just a terrific opportunity for us. You know, we sit at the intersection of these two really big trends: renewable energy on one side that's growing incredibly fast, and then point of sale finance and the buy now, pay later trend. And the Apollo team really understands both of those trends very, very well, and are a great value-added partner. So we're thrilled to be partnered with them here.
Awesome. So Matt, I want to dive into the backing on this deal. So you, of course, mentioned that SPAC taking you public, but that pipe. We also got Chamath Palihapitiya, Franklin Templeton, and Neuberger all attached to this. So what does that mean, for the validation of the company and that growth ahead?
Yeah, Chris, we were really pleased with the support and the quality of the investors who believe in our story and are supporting us. You know, what we heard consistently is investors like our simple story. It's easy to understand how we make money. We're in a high growth market, and we've had a tremendous amount of success. And so that's been well received. And again, we're really pleased with the investors who've put their faith in us.
Awesome. So SPQR shareholders are going to own 26% of that new company after the merger. I cover a lot of SPACs, and I got to say, 26% is on the higher end that I have seen. So how could that be a positive for shareholders going forward?
Yeah. So again, going back to the quality of investor that believes in Sunlight, I think we think it's validating to what we've built and where we're going, and we think that's broadly good for the investment community. So we're really pleased with the support and very appreciative of it, and excited to finalize the merger and be a public company.
So Sunlight operates with a B2B2C residential solar model, so business to business to a consumer. Can you explain that business model and why it's important for Sunlight and within the solar industry?
Yeah, so let me maybe just a little bit of context for how solar is sold. So for the typical customer, they don't wake up in the morning thinking they want to go solar. A salesperson will knock on their door. They'll introduce themselves and they'll explain how solar works, how the customer can save money, what the system will look like on their roof. And that sale literally happens at the kitchen table. And so our B2B2C model is we're partnered with 1,000+ solar installers and home improvement contractors. And that's the B2B part. And they introduce us to the consumer once the consumer decides they want to go solar or make other home improvements. It's something I've always really loved about this model because we have these relationships, we can access the market, drive significant volume, and we effectively have no marketing cost. So it's a very efficient model for us to scale, both from a capital perspective and from a volume perspective.
So turning back to solar, so one of the trends that we've seen, and it was mentioned, in your presentation, is the cost of solar coming down and electric prices going up. So, what does that mean for growth in the solar industry and a company like Sunlight Financial?
Yeah, there's two really interesting trends that are happening that are helping to drive solar. So first, people go solar today, not just for the environmental benefit. They do it because they like the economic impact. And that's good. That's how we get mass adoption. And so there are these two trends. One, the cost of solar is coming down over time. Soft costs are coming out. The cost for the equipment itself is getting cheaper. And that makes solar less expensive on an absolute basis. The other trend is historically, the cost of utility power is increasing in the range of 2 to 4% a year. And so that makes solar less expensive on a relative basis. When you put those two things together, you get significant growth in the overall market. And that's what we've seen historically. And we think that's what we'll continue to see going forward, that there'll be good growth because of the sound underlying economics for the consumer.
So for the solar market, one of the things that Chamath mentioned in his one pager with Sunlight was the buy now, pay later concept. So can you kind of explain that and how Sunlight plays a pivotal role in buy now, pay later?
Yeah, so I always describe our business as a point of sale finance business focused on residential solar, and buy now, pay later is effectively that point of sale finance aspect of it. We're allowing customers to go solar. Typical solar system costs $30,000 to $35,000. We're allowing them to go solar with no money down, and because of the economics of the way solar works, they typically save money right away and tens of thousands of dollars over the life of the system. And we're able to do that for them by providing that point of sale financing. So they're not actually going out of pocket to get those savings. So it's part of a much bigger trend, and again, it's really helped to drive significant growth in the industry.
So in your presentation, it mentioned some proprietary technology. So can you explain, how Sunlight has proprietary technology and what that could mean against some competitors in the space?
Yeah, well, I described that point of sale process that's happening with the salesperson and the homeowner literally at their kitchen table. And so after the salesperson has spent an hour with the customer and explained solar to them, the last thing they want is friction when it's time to finance. And so we make it very, very simple for the homeowner to get financing at point of sale. And so we have a proprietary technology platform. We call it Orange. And it's as simple as a homeowner can literally take our app and their driver's license. They snap a picture of their driver's license. It uploads their information. They fill in a couple of other pieces of information, and they go from credit application to full approval in less than 2 minutes. So we make it really, really simple at the kitchen table, take out all of the friction, and it's entirely paperless. So there's never been a fax or an email to process an application in our process. It's entirely through the app, and it's entirely electronic. And that helps the salesperson sell more, and it gives the homeowner a terrific experience through Orange.
Can you talk a little bit about partnerships? So I see, again, 9 of the 10 largest solar installers in the U.S. part of this Sunlight platform. So, who are some of your partners, if you can disclose, and, how important is it to be a leading partner with some of these bigger names?
Yeah, so I can't get into specific names out of respect for confidentiality of our partners. But as you said, we have relationships with 9 of the 10 biggest installers. So if you think about some of the largest public companies who are in the solar space, there's a very, very good chance that we're one of their partners. But we have really good access to the entire market. We have over 1,000 solar improvers and solar installers and home improvement contractors on the platform. And we estimate that our partners generate over 50% of the solar installations in the market. So really good access to the overall market.
Perfect. So the current solar market, only 3% penetrated. So, as Sunlight and other players in this market look to grow, what are some of the targets as far as market share for the solar industry and for Sunlight as a company?
Yeah, it's remarkable. So if you look at the growth in solar, it's been significant growth over the last few years. To put that in context, over the last 10 years, the market has grown 10x. So it's 10 times larger today than it was 10 years ago. So incredible growth. But Chris, you're right. Only 3% penetration of US rooftops. So there's incredible amount of room to run. If you think about, to again, put a little bit more context around that, in California, I believe the penetration rate is in the teens, kind of low double digits. Hawaii, I believe it's higher than that. And same thing if you look overseas, I believe last I checked, Germany was over 20% penetration. So if you think about where we are in the US at 3%, and you think about benchmarks for leading markets, it's significantly higher. And again, just speaks to how big this opportunity is over the coming years.
So in 2019, Sunlight Financial entered the home improvement space. So can you kind of walk us through what the growth is in home improvement and what that means for Sunlight, and also what some of the financial impact of that entry looks like?
Yeah, so we always really saw solar as a type of home improvement, and a specialized type of home improvement. And a couple of years ago, we were talking to our solar installers, who also, many of whom have home improvement divisions, roofing, HVAC, windows, and they were not satisfied with the financing, the point of sale financing options they had. And so they asked us to develop a product for them, and a financing platform, and that's exactly what we did. And so a little bit more than a year ago, we entered that market. It's a huge market. It's a $400 billion market. So it's really large. It's highly fragmented. And we think, again, another opportunity, and it's adjacent to what we do in solar. So it's a very natural extension for us. That said, if we look out over the next few years, we still think solar will make up the overwhelming majority of our volume. But we're bullish about the opportunity in home improvement, and we think it provides really good upside as we continue to build out that market.
So I want to talk again about financials. So one of the things that drew me in is that capital light business model. So just kind of walk us through, and you mentioned the company profitability. So why is that capital light model so important for your company, and what does it mean for financials?
Yeah, so if you think fundamentally what we do, we have two networks of partners. On one hand, we have solar installers and home improvement contractors. On the other hand, we have capital providers who want access to high quality loans with good risk adjusted returns. And we effectively match the two of them in between. And so when a homeowner applies through our platform, through Orange, we underwrite on behalf of our partners, and we originate the loan on behalf of the partner, and then they fund the loan. So those loans don't sit on our balance sheet. It's a very clean, very simple model. We earn a fee up front, and generally we don't have ongoing credit risk. And so again, it's a really simple model. It's very efficient, and because we're not building this balance sheet with ongoing credit risk, it's easy for others to understand how we make money. And it effectively accelerates the cash.
Awesome. So guys, again, we're talking to Matt Potere, the CEO of Sunlight Financial, going public with a SPAC merger, ticker SPRQ. So I want to talk about the new administration we have in the US. So I'll try to break it up into a couple questions here. So what does the new Biden administration mean for the solar market?
Yeah, so here's the really interesting thing about solar. It's bipartisan. And in a world where everything seems to be partisan, it has really good bipartisan support. At the end of December, the solar investment tax credit was extended for 2 years. It's very helpful from a policy standpoint. And that was under the old administration, under the Trump administration, and in a Senate that was controlled by the Republicans. So you can see it's got good bipartisan support. That said, the Biden administration has been very vocal about their support for renewables and to help drive volume and growth in this industry. And there's good reason for that. Solar is a huge producer of jobs. In fact, solar installer is the fastest growing job in the country. And so it gives you some sense for why this is really bipartisan. And so the Biden administration have said that they're supportive. This business doesn't need additional policy support to be successful. Nor do I believe the industry needs it. I do believe as we see continued support, we'll see accelerating growth. That's clearly good for our business. It's also good for the economy, and it's good for the American worker. And so we're optimistic about that as well.
So Matt, adding to that, with Biden being a supporter of solar, you talked the bipartisan, but I think solar is going to get a lot of attention and focus from that new administration. So did that play any role in deciding to go public now, with the new administration and that positive focus on solar?
So that's helpful, but we actually made our decisions, and when we were thinking about strategic options in the fall. It was before the election, and so I mentioned we don't need policy support for this business to be healthy and to grow, and so we made our decisions to partner and to go down this path with a SPAC and to become a public company, really before we knew that the Biden administration would be in place.
All right, and then one more question from me before we get back to Spencer, and maybe some questions from the chat is, I want to turn back to financials. So I see an estimate of $4.3 billion in funded volume for 2023. Can you just walk us through a little bit of that funded volume and revenue projections, how those play out, and when we may see any revisions to any of those estimates?
Yeah, so I believe you're referring to the presentation on our website, and I encourage people who want to learn more in the audience who wants to learn more about Sunlight to go to the website and get all of the information, and it also includes some of the disclosures about our company. Last year, the second half of 2020, we originated roughly $2 billion in annualized volume. So when you look out over the next couple of years and you look at our volume forecast, it's certainly significant growth. But when you think about what we originated in our run rate coming out of last year, we think it's a reasonable forecast and very much attainable. And so we feel good with the momentum. There's the momentum that we have in our business. There's the overall momentum in the solar market, and both of those will play into our volumes.
A question here from the chat that I want to give you, Matt, and let me just find it right here. There we go. No, I lost it. Oh my gosh. Oh yeah, over 10 years. How much does a panel decrease in effectiveness?
Yeah, so a panel typically degrades less than 1% a year. It varies by the panel and depends on when you bought it, but it does tend to deteriorate a little bit over time each year.
Okay, and then I saw a question earlier. And I wish I knew exactly when in the conversation this question, like what prompted this question. But he asked about, what about solar for people who only have a few more years on their house?
Yeah, so what we offer with solar loans is we allow the customer to own the system on their roof. And there's really two ways in which people go solar. They either rent the system, they lease it, or they do a PPA, or they own it. And if they own it, we provide the loan. And so the nice thing about solar is, if you're toward the end of your mortgage, or even if you're planning on moving, with a loan, you can own the system. It typically increases the value of your home, and so it's adding home value, and you get the benefits of ownership.
And then I don't even know if there's an answer to this one yet, but when do you expect the merger, or maybe we hit that already and I just missed it? But do you know when you expect the merger or when's the vote?
So we'll file with the SEC. We'll file documents with the SEC in the coming weeks, and we would expect the merger to close sometime in the second quarter.
All right. That was a lot of questions. We threw a lot at you, Matt. We appreciate it. Matt Potere, he's a CEO and board member of Sunlight Financial. Again, the ticker that of the SPAC they're merging with is SPRQ. Matt, we appreciate the time. Thanks a lot.
Thanks for having me on. Thanks, guys.
Thank you, Matt.